Hey everyone, welcome to Modern Wall Street's Trader Talk Outside Style, and look who is joining me. It's our crowd favorite, Stephen Guilfoyle from Sarge 986. Stephen, hello.
Hello, Olivia. How are you?
I'm good, thanks. How you doing?
Outstanding. Thank you.
I should say, well, thank you. Everyone's, now that we're on Twitter now talking, everyone's going to comment on that. But what they should be commenting on are today's money makers or profit takers, depending on how you look at it. Let's talk about energy and tech. Which one are you having some more fun with?
Oh, I'm having more fun with energy lately. I mean, although with the tech stocks that I'm long, although I took a punch in the kidneys yesterday, I'm still up so much, and a lot of them have rebounded a little bit today. But I'm up so much in those names where I can sustain the hit here and even look. It's not really at a level, some of these names, let's say like NVIDIA, where I would want to buy more. But I didn't sell any yet. And if it comes in a little more, yeah, I would look at that. But as far as the energy names, oh, man. I mean, I hate to pat myself on the back. But, man, did I do a nice job in Apache.
Really? Okay.
I mean, this is a position that I started buying it early, way too early. And I really got hurt in the beginning. But I managed this position. I did what they call dollar cost averaging, which can really get you hurt. And I probably ended up with more shares than I wanted to, but now it's coming back my way. Now we're in the green in this thing. Schlumberger is another favorite of mine. I think if oil can sustain the levels it's at, if WTI can move on past this 51 3/4 mark, use it as support, get it on to 54, 55, I think you'll see Schlumberger come alive as well. And I bought Valero in the wake of the storms. So I didn't buy it for the same reason that I bought those other two, but it's along for the ride. So we have something nice going on here.
Well, something I've noticed is that while we have lacked some leadership with the Qs or the NASDAQ, we have seen the Russell, the transport start to step up a little bit. Is this some sort of rotation, or are we supposed to expect the other characters in the game to catch up eventually with this?
This is optimism over tax reform. Now you see the healthcare reform package kind of fell apart. They're probably not going to go forward with that. In a perfect world, I'd like to see them reform healthcare. But in our imperfect world, I want them to cast this aside right now because I think tax cuts are much more important. Let's get the show on the road, and let's improve situations for stocks like small caps, which have a very high net effective tax rate. And once you get the economy moving, once the domestic economy starts moving, and those small caps do better, then you'll see the transports, pardon the pun, start moving.
Well, I'm glad to get you on this subject because you do talk about Apple and NVIDIA. By the way, are you still long Apple, or would you buy more? What did you do with that?
I bought a little more. I'm not long. I'd say I'm long about a third of what I consider a position. I'm up small in the name right now, but nothing to brag about.
Okay, thank you. Now next, small caps. There could be some growth stocks there, something that's a little less expensive than, let's say, NVIDIA and Apple. So what do you see there?
Small caps depend on, well, one thing. They haven't participated in the earnings expansion that the rest of the economy has participated in, and that's because the rest of the Dow Industrials, the top half of the S&P 500, the top half of the NASDAQ composite have all benefited from the weak dollar. Now the dollar has stopped softening. The euro is actually getting weaker right now because of what happened with the German elections. That's not really going to help the small caps, but it is going to draw the front runners back to the pack a little bit. The small caps still need the tax package. They need that kind of help to get that ball rolling. And then you'll see the slack, if there is slack, still in the labor market improve. There's certainly slack on the wage side of the labor market. I don't know about the employment side, but wages could certainly improve.
All right, well then that leads us to our next topic. I can't have you on the show without talking about the big kahuna, Janet Yellen. I'm sure you want to, either take some stabs or not at her, but she backed a December rate hike basically today, along with unwinding the balance sheet. Now, the way they handle this, Stephen, is the ultimate test on if they handled QE financial crisis perfectly. Would you change anything right now, or do you agree with her?
Actually, I'd love to criticize Janet Yellen, but she's playing the game right now, okay? I do believe they had to get the ball rolling on managing the balance sheet, and I do believe they had to go small at first. So they're doing the right, I would have started earlier, but they're doing the right thing by getting that ball rolling. As far as tax hikes, I'm not sure that I would want to raise rates in December like they're going, but I do understand the need to paint the picture that way, because when we get to December, it's going to be a whole lot easier to come back from a hawkish position than it would be to ramp up from a dovish position. Now, we saw today new home sales, right? Not so hot. Demand isn't there. Actually, median price for new home sales was down something like 6% month over month. We saw existing home sales kind of weak. We saw retail sales kind of weak. Industrial production kind of weak. Tomorrow's durable goods. So the economy's not great, but it's not awful. And I do think that if these numbers don't improve as we move into autumn, they might just peel away. And we know Neil Kashkari doesn't want a rate hike. We know Charles Evans doesn't want a rate hike. December's the last month those two guys get to vote because it rolls over in January. This rate hike in December is by no means set in stone.
All right, and we're going to hear from Kashkari tomorrow. But one last question. Along with her comments, we see gold taking some profits today. But in general, it's been shown relative strength with bonds. But we're not really seeing a market sell-off technically. So why is that?
You're not going to see a significant sell-off in gold until investors are comfortable with the North Korean situation. Okay. All right, that still matters. I mean, gold could come in a little bit more. I see support in around 1260. I see more support around 1215, 1220. That's down a long ways from where we are now, battling around the 1300 level. But I don't see the ability for gold to come in past that. And if it does come in that far, right now I recommend a 7.5% allocation towards gold. I'd probably move closer to 10% as it moves down below 1260 if it gets there.
All right, so we can't be offended if someone says we have a heart of gold yet.
No, not at all.
Okay. Well, Stephen, we know you have one. Thank you for telling us all the good deeds. And until next time, Stephen, follow Sarge, Sarge986 on Twitter, and I will talk to you then.
See you then.